Stocks ended the volatile week at support. I'll explain which support that is. Dollar also bounced at the logical support level, and as a result, gold came under pressure. We will also look at Bitcoin and Solana as they both head down. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, February 28th, 2024. Don't forget to hit the like button, subscribe to this channel, share this video, and make a comment. And we made it to the end of the winter. Congratulations. Although officially, technically speaking, winter doesn't end until March 21st. If you're a subscriber, stay tuned. We'll be covering various ETFs, large caps, securities, market breadths, crude oil, as well as British pound versus US dollar, some of the foreign ETFs, large cap stocks, and speculative securities, as well as gold related in the members only video, so stay tuned. First, we're looking at S&P 500. As always, I'm using my proprietary MasterChartsTrading.com price action indicators, which you can see on this chart, this green, blue, red, and yellow line, and you can find out more about them by going to the link in the description of the video. So first of all, right this instant, S&P 500 has landed precisely on this green support resistance line. Now, in the past, this green line provided some support. So, for example, there was a bounce here back in December and early January. There were also bounces around the same level, for example, back in September, as well as in July of last year. Notice that in July of last year, August of last year, the price attempted to get down all the way down to the blue support resistance line, but never made it there. Usually this is the best area to buy, in my opinion. So for example, previous opportunity to buy was in November of 2023, so almost 2 years ago. Right this instant, we're looking at S&P 500 at support, at the first support, which is a green line. In fact, yesterday we pierced through it and I was like, this doesn't look too good. And then today we rallied and we actually closed above it. So by and large, this action is quite constructive, quite good. And I think at least an attempt to get to new records could be very soon upon us. Now, for now, there is really no changes to our posture. We're still looking at S&P 500 and stocks in general from the point of view of uptrend. We want to be looking for buying opportunities. So for now, I don't see much change. I mean, there is some market breadth indications that we could be topping, but it's not, obviously, nothing is written in stone yet. And plus, tops are notoriously difficult to pinpoint, and we only look at them in a rear view mirror and then like, oh wow, that's a top. Wasn't it obvious at the time? No, it wasn't obvious at the time. So this is the same thing. We just hit all-time highs on the 19th of February, and I think an attempt to get to those records could be in the cards next week. Looking at the dollar, this is dollar currency index, ticker symbol DXY on TradingView.com. So notice how my indicators provide very clear way of trading and just thinking about various securities. So, for example, here's the entire picture back in October of last year, 24. We see dollar breaking out, and now it reached 2-year high back in January of this year. We attempted to get higher, but so far have been not able to get to new records, to new 2-year highs or 3-year highs or so. And so we came down all the way down to the blue support resistance line, kind of did this thing where we kind of made a low below the blue line and then closed above it. So this was actually our signal to buy the dollar. And if you bought the dollar, then you're already in a small profit. You can trade the dollar directly. This DXY is tradable, but not in the United States. And you can also do like, currency pairs like euro versus US dollar or British pound versus US dollar. But for now, dollar seems to be at least no longer dropping and possibly going to rally, and actually is rallying as we speak. So by extension, the gold is coming under pressure. Gold is traded in US dollars. Notice this where I'm hovering, gold divided by US dollar. So as I just showed, dollar is getting stronger, bigger, and that means that this currency pair, gold divided by US dollar, will most likely continue lower. This is exactly what's been happening for the past few days, and so we're approaching that same support resistance level around the green line. Let's see again if we hold there. For now, gold has really did just wonderful lately, and notice again this opportunities to buy, all upward facing arrows. And if you bought back in, let's say, February of 24 or so, then you're up 45%. So people say that gold is a good hedge against inflation. It's possible, but I think stocks are even better hedge against inflation because of how much they go up in value during the inflationary periods. For now, again, let's look at, we're looking at gold potentially continuing to be under pressure, but I still think that gold is still in an uptrend. So if we do pull back, let's say toward this blue support resistance line, which is currently at 2,600 or so, then I think we may want to look at the opportunity to buy again. For now, I would just hold our positions. Okay, and then let's look at some of the cryptocurrencies. So currently we're looking at Solana. So Solana, we can look at the longer term chart. Solana actually hit an all-time high. It hasn't been traded for that long, but this is an all-time high that was hit on January 19th. And since then, we just sort of completely unraveled. Now, technically speaking, Solana is in a downtrend. Why? Because it has closed below this red support resistance line, and that implies, since we're trading currencies here, that implies that we're in a downtrend. So Solana for now is in a downtrend. To get it back up in an uptrend, Solana needs to rally quite a bit, about 50%. So currently it's around 145. Needs to get to about 225, which is about the blue line. And in that case, in such eventuality, we will again start looking for buying opportunities. For now, if you can potentially sell it short should it bounce towards 179, towards this red line. It's currently at 148, so it needs to bounce a bit, and then potentially we want to sell it short. But I don't know if you really have an opportunity to sell it Solana short. Some exchanges offer that. Bitcoin also came under pressure after hitting all-time highs here in January at around close to 100. Actually, did it go? Yeah, it went above 100,000, and then kind of came down. So right this instant, Bitcoin is retesting this blue support resistance line. So far, we sliced through that area, but today's action actually is not bad. Like, this looks like a potential hammer candlestick, and I'm talking about Friday the February 28th, because today cryptos are traded 24/7, so already we're seeing action for Bitcoin. So this looks like there's a potential for it, that it stopped falling. Let's just look at 4-hour chart, see where it goes. Yeah, not really much we can say about this chart, but for now, Bitcoin is still, technically speaking, in an uptrend. So if we close above 86,742, I would consider it a buying opportunity, and we'll, similar to what we had before, basically. Notice that the buying opportunities around the blue line, and then a rally higher. Will it happen this time? Maybe. There's no way to tell. I mean, if you guys know a way to tell if the stock has stopped without, or rather, using some sort of a objective measure, because subjectively speaking, many traders will say, "Oh, well, yeah, this is a obviously a shooting star candlestick, and that means resistance. That means it won't go higher." Sometimes it goes higher, so there's no 100% indicator that I'm aware of, or even very good traders still are wrong at least some percentage of the time. Although very good traders can be, what's the word? They like their opinions, basically, I guess is the word. So I look at it from a point of view algorithmic trading, and from my perspective, we're about to see a opportunity to buy Bitcoin. Question is, will it go higher or not? And there is, again, I don't think there is a way to tell. If there is a way to tell, why don't you make a comment or send me a direct message, and then we'll try to figure out, maybe we can make a algorithm out of it. All right, and that's it for today's recap. Please stay tuned. We'll be covering quite a bit of various securities. Notice on this slide here, we're gonna cover market breadth, crude oil, British pound, as well as various ETFs, large cap stocks, small cap stocks, and gold related as well. So come head over to MasterChartsTrading.com, sign up for one of the products. Again, I have 2 products in one bundle. These trading indicators are basically these lines in the chart. You can trade, like, this is Bitcoin, so theoretically you could trade on, like, let's say 5-second chart. Well, let's go to like 15-second. See what happens. Okay, so like this, let's say this is a 15-second chart and you're trading Bitcoin. So what would you do? So you just have to kind of look at it visually, because if I was to say, well, at this time on 28th of February at 1803 and some seconds, then you buy it there. But this is a very, very short-term chart, 15 seconds each. So if you trade it, you can, it's pretty obvious, when the security is above the blue line, you just wait for it to kind of drop towards it and then buy it on close above it. Did that make sense? Same thing here. Notice opportunity to buy, and then you have a nice move higher. So theoretically speaking, this went from 84 to about 85,300 or so, or it's about $1,000 or so. So can you make money here? Sure, especially if you have a leveraged account. But generally speaking, we trade on daily charts because humans are notoriously, have low attention span. So stay on those 15-second charts. You need to really be in it. In any case, these indicators, these green, blue, red, and yellow lines, are very useful. They're available for TradingView.com, this interface right here. TradingView.com is free, and you can sign up for TradingView.com free of charge, and come back to my site, MasterChartsTrading.com, and then sign up for the indicators. Once you sign up, I'll open the door for you, and you'll be able to see them on your chart on TradingView. Yeah, I know it's convoluted, but there's no other way to tell. No other way to do this. If you want to just get the newsletters, sign up for that. So again, I send out daily alerts about the various securities we trade. Notice we have quite a bit of securities that we choose from, and you can make as many trades as you like. There's always something going up or down. And of course, the best deal is to get both trading indicators and newsletters, and then that is at $49.95 per month. If you get a yearly subscription, that's monthly equivalent, and if you get it at monthly subscription, it's $59.95. All of the plans come with a free 7-day trial, so you have time to cancel should you absolutely hate it, but I know that people do not want to cancel it because it's so useful, especially the indicators. That's it for this week's recap. Again, thank you for watching all the way to the end. Don't forget to hit the like button, subscribe to the channel, make a comment. Thank you for watching. Have another great trading week. Bye-bye.